Oh, can you hear me? Okay, guys, we're going to switch over to Larry Fink, the CEO of Blackrock, who's giving an interview with CNBC. Let's see what he's got to say to do with tariffs and everything else going on in the crazy world right now.
You don't need that.
Good. What may be happening is a lot of people are buying in advance of the elevated increases, like lines around Apple stores buying iPhones and all that stuff. But I believe all the uncertainty is really making everyone pause. And everyone's waiting.
Let's turn the volume down for that clap for the opening bell.
We just say slow down until we have more certainty.
Yeah.
And, you know, we now have a 90-day pause on the reciprocal tariff. That means longer, more elevated.
Hey, shush. Larry Fink is speaking.
Take a quick pause. Let's get the opening bell. We'll be right back to Larry for a conversation.
More red than green.
We've got Project Hood, that's a Chicago-based nonprofit.
Pet meds, who are they?
The online pet pharmacy, Pet Meds. There's something you want to buy. Dog gets sick, man. You got trouble. No doubt about it. All right, Larry, let's continue. I know we got a little bit of background noise here, but you're making the point. You obviously talked about this. Listen, we were talking about it, the uncertainty. So many CEOs we're speaking to. I've heard this now many number of times, similar to early days of COVID, like 5 years ago. Sure. I just don't know what's coming. I have nothing to expect, and so I'm keeping my head down. Is that a fair way to sort of characterize it?
I think that's a bad answer, because today you need to run into the uncertainty and try to find solutions.
Okay.
So keeping your head down, I would not like that as an answer as a shareholder with any CEO.
Right.
I mean, to me, this is an opportunity to look for opportunities. And because of all our clients having uncertainty, we are spending more time with more conversation with more clients globally than any time. Our job now is to be, helping, calming, giving them ideas. So if a CEO said, I'm going to keep my head down.
Well, I guess that was the way one characterized it. But I guess it's the uncertainty itself that creates an inability to do long-term planning in terms of capital allocation.
There's
right
no
now.
question CapEx is falling right now until you have better understanding where should that CapEx go. But I do believe, as I said in my talk this morning, I do believe the mega trends are still with us, whether it's AI, data centers, infrastructure, the whole reorientation of our economy. So I think the mega force trends are not going to change by what is happening now. But maybe the execution of some of these trends may be delayed, maybe pushed out longer. But I still remain to be optimistic over the long run. Yes, we have to recalibrate. Yes, I do believe we're probably starting, if not, we're in a recession. Yes, I think the market is still underestimating how high inflation can get. If you factor in all the tariffs,
right,
you factor in all these other issues, it's going to be quite additive. I mean, I read in a report that if you just take the tariffs in the cost of home building, the average new home could be up as much as 26%. We already have a housing affordability problem.
None of this sounds any good to me, Larry. I mean, and it's all self-inflicted, by the way. None of it needed to happen.
This is not a pandemic. This is not a financial crisis. This is something that we've created. As I said also on Monday, the United States post-World War II was a global stabilizer. We are the global destabilizer.
Right.
Now, Larry, that's a very hard thing to say, because I pride ourselves of being, bringing the leadership, bringing the conversations. But I will say the power of U.S. capitalism is still alive. I will say more and more times clients worldwide are asking for our, at least at the CEO level, they're asking for our vision, our views. They still want to engage. They still want to build. So I'm long term, I'm less worried about some of these issues, but in the short run, I'm petrified at some of these issues.
Petrified.
Well, let's speak of being petrified. You and I are old enough to remember when Nixon went to China, opened the door,
or the gold, or walking away from the gold standard.
Right, the same couple of years, and I think that there was tremendous anxiety then going the other way. Did we really think that we could have a great relationship with Mao, who was a mass murderer? Did we think that we could actually do business with China? We did $1 billion with them the next year, but then next thing we know, we're doing $100 billion. Now we're doing $438 billion, and now we want to do zero. How does zero impact our country?
Well, we've had now 20 plus years of supply chain creations, and another economic force, Jim, post-World War II was consumerism. So we built the whole foundation of economic policy around consumerism, providing Americans with the cheapest products. Right. And so that was the foundation. Now, did that come at a cost that some of our communities were decimated, where they lost jobs? Absolutely. So maybe we went too far on the whole concept of consumerism. But let's be clear, the major economic foundation was based on consumerism. And so we wanted our companies to go around the world to find the best places to provide the highest quality at the cheapest prices, so we could consume more. And we always thought that type of consumption was the most progressive form of economic behavior. More people could have more. And that was one of the fundamental reasons why the United States was the leader. Yes. Because our citizens were huge consumers. By now changing this equilibrium, it's going to be harder to consume, and we're going to have elevated inflation.
Can we afford to have no relations with China? Do we have to have a dialogue?
One of my asymmetric views is we will have a strong relationship with China, one form or another. I do believe we do need a trading agreement with China. I hope there's a future where we have conversation with China, where China agrees to buy $100 billion of our agriculture to help our farmers. I hope there's a future where China agrees to buy a large portion of their LNG with U.S. producers. So there are.
But they don't need it.
And I know right at this time there's no conversation or little conversation. I know the whole issue that's going around it, but I am hopeful that we are going to have conversation with China that will hopefully allow us to have relationships, that there is business. That being said, we are still going to have tensions related to technology. We are going to have to making sure that it's U.S. technology that's going to be diffusing technology, especially for AI. Right. It should be U.S. technology that is connecting the world, not Chinese technology.
Well, you guys have been very involved in financing some of that build out, of course, being a key partner, for example, in the build out of the AI infrastructure in terms of data centers and everything else.
And obviously not worry about the peak in data center that Wall Street's so fixated.
There is no peak.
There's no
in fact, the capex that's necessary to do that is only going to grow. As we democratize AI, we need more data centers because the utilization will be greater. So this is
but the costs are going to go up, aren't they? Conceivably, for the servers that go into a data center.
Right now, a 1 gigawatt data center with all the GPUs, all the power, all that, we're talking $50 billion per data center.
Right.
We're talking major, but data centers don't throw off a big return. So a data center throws off, even with leverage, because at 11 or 14% return.
But that's fine for you're happy to finance that all day long.
But that's the beauty of our capital markets. Microsoft trades at a much higher PE.
Right.
Owning data center degrades their PE. Same thing with.
They don't want to. They'd much rather have you and pay you, and they're a great
power of our capital markets.
All
and that's
understood.
Why I'm so bullish.
But does it? This has been the most important thing we've been talking about for the last year and a half, 2 years. Has been driving a lot of our certainly our equity markets. Do we slow down our advances as a result of some of these tariffs that are in place right now?
We better not, because China's not slowing down in their technology.
Okay.
It's Sputnik. We need the competition to be great.
Competition is good.
They are not slowing down at all.
We're not, and they're building 100 gigawatts of power right now using nuclear. So they're going to have the power generation to do AI. This is one of my calls of action. We need to be forceful in building out our infrastructure, that we have the power generation so we can do these
But I want to get to a lot of other subjects, but you see no slowdown at this point at all in terms of the spending by the hyperscalers and the others who would be customers of the data centers that you get behind.
There certainly could be one.
All right, guys, that was Blackrock CEO Larry Fink. This guy, let me just show you this here. Yep, he's managing $10 trillion in assets under management, and you're managing your little crypto portfolio, and so am I. But the reality is, he says we could well be in a recession already. He thinks markets could be underestimating the inflationary effect of these tariffs. He spoke about the China issue as well. We need to understand, look, this is not something that's going to go away, immediately. This is a big dump. We saw that, the market's having to take this into consideration. It's going to feed through to CPI. It's going to feed through to our inflation figures. It's going to feed through to earnings. And hopefully, just hopefully, particularly the US-China deal can come to some semblance of normality.